Alright, so we'll quickly go over the remaining trades from last week. So I did a trade breakdown. In the previous trade breakdown, I had, I think, around um, two open positions, and the other positions, which I think was oil, NQ, um, and euros. So those are my other trades, right? And Bitcoin. So I had open positions on a few of them, took profit in that video. But yeah, the Bitcoin and Euro positions were the only remaining ones that I had open. So we'll quickly go over those ones since they've now played out. So on Bitcoin, nice swing trade on the higher time frames, weekly fair value gap, daily fair value gap, monthly fair value gap, equal lows, all this trend line lows built up, all these equal lows on the higher time frames, and then on the yearly time frame we had this monthly fair value gap, which is my drawn liquidity. Swept the previous year high, closed back inside the range, so most likely this is going to be a 3 bar swing where we come and take out this low into the monthly fair value gap. So yeah, that was the logic behind the swing trade. Just shorted on a daily with invalidation above the imbalance, and that was it. Just played out nicely. So yeah, I did take a scaling position here, but then I closed it because we closed above this 4-hour fair value gap. So it looked like we were likely going to go for this high again, but we left equal highs. So once we closed back below the 4-hour fair value gap again, it was clear to me that we're likely going to go and take out these lows. So that's what happened. And initially I wanted to TP at this low, but because the market was closed on the day that it happened, I just waited for market open to close my position. So yeah, it's got TP in my position for 2.5R, and I'm expecting Bitcoin to go lower here because we've left equal lows here, and if you look at Ethereum as well, we've left equal lows here as well. So I'm anticipating price to come and take out this low, but I'd rather take out my position now here instead of hold, because now I've been holding this trade for almost 3 weeks now. So I'd rather just take my profits at this point. But yeah, that was the first position, closed it out, and now the second position will go into euro. So on euro, and we can also look at DXY as well. On euro, we took out the monthly buy side, which is the previous year high, with the daily being massively overextended, and then and at this point, right, you don't want to anticipate a reversal, or because at this point you're not really too sure what the market profile is going to be, right? But all you can expect at least is that there's likely not going to be another expansion to the upside, because we've already had this massive expansion and we already took out the buy side. So there's not really any other buy side at this point that price is going to go for before giving a retracement. So it's either likely consolidation, or either price is going to give a retracement or even a reversal. So I was anticipating a retracement back into the premium of this range, this dealing range low to the dealing range high, and we have the OCE levels. We have this flat open on the daily, forming a daily imbalance, and we have this low as well, also a daily imbalance, resting inside of the discount. So if you wanted to look for longs, that would be the area that you'll be looking for your longs. But yeah, if price gives a setup after taking out the buy side on the 1 to 4 hour, then you can look for shorts back into the discount area before going long again. So yeah, what was my confirmations? So firstly, you want to use the 1 and 4 hour time frame for this, right? Those time frames become very significant at this point. So yeah, on the 1 hour time frame, we had this large wick and we formed this imbalance as well. So this is, to me, price rejecting off of the external. Once we inverted this 1 hour fair value gap, at this point it's too early to look for shorts, right? You want to look for another confirmation. But yeah, on the 1 hour time frame, we closed below that inversion fair value gap. But on the 4 hour time frame, we retraced into these bullish PD arrays, these bullish 4 hour fair value gaps, which price could have easily, came into it and then made a new high, and then it could have gone lower. So you don't want to blindly short the first bearish PD array that forms when price can come into the discount and then go higher. So here you want to look for another confirmation, right? So once I seen price push higher from here back into the bearish PD array, I was looking for some sort of confirmation that we were going to go short, and then we engineered this high in Asia session, and then we swept the high in London session, and then we displaced lower, and we formed this break and order block. So to me, that was the indication that we were gonna. That was the indication to me that we were gonna go lower here. So I took my position here. On one account, showed the next open high low close, and then on the second account I entered on a retracement in this hourly fair value gap, anticipating that the high of the day was placed in, and we're going to continue lower and at least take out the previous day low, which we didn't take out. But yeah, we had this low, and then we had these lows as my next draw in liquidity. So so we left equal lows here, and on DXY we also did not take out this high. We just pushed higher and left equal highs, and then we came all the way back for this low again. Quickly break down DXY as well. On DXY, same thing as well. Took out the sell side, displaced higher. We formed on an hourly time frame, same thing, inversion fair value gap, and then we came lower into the key level, took out the Asia lows, and then we closed above these down close candles, forming a bullish order block. And then on a 4-hour time frame, which gave me a solid conviction to take a trade on euro, is that we inverted this opening gap. So that was my second confirmation to go long here, and then we expanded away from it, the opening gap, but then we swept this high and then closed back inside the range. So to me, this is just consolidation, and as I was saying, the profile is either likely a retracement back into these highs, or price will consolidate, and you don't want to get cooked instead of a consolidation. So on euro, what I did was that once, even though EU failed to take out these lows and DXY failed to take out the highs, just in case of a consolidation profile, I moved my stop loss to this high, right? Because we had a liquidity sweep and we had large displacement, and on the 15-minute time frame we formed these imbalances. So if we're bearish, you want to see price use these imbalances to continue lower and sell off towards these lows. But what happened was that towards the daily close, we just slowly grinding higher, and got rid of this whole down move that we had. So yeah, price went for this high one more time, which to me was a bit that it doesn't really make too much sense. But yeah, we had another liquidity sweep. We had this London close high engineered, swept the high inside of the key level, the inside of the order block and the breaker block, and then we displaced lower again. So we formed a new bearish leg, and to me at this point it was obvious that because we're still technically, even though this is a bit choppy, we're still technically in bearish order flow, right? Like we're making new legs, taking out highs, and this is still bearish order flow to me, right? Like there's nothing really bullish about this. We're just sweeping highs and displacing lower. So for me, after we took out this high and displaced lower, and if you look at a 4-hour time frame, if I had this, we finally got a closure below this 4-hour fair value gap, which was price was consolidated, and you see the bodies of the candles were just very wicky. But yeah, we took out this high and then eventually closed below this 4-hour fair value gap. So we had an inversion, and then we had this bearish 4-hour fair value gap aligning as well, which makes this like a high probability level to anticipate lower. And we had these 3 up close candles forming a bearish order block. So if price is bearish, you want to see price to come into the 4-hour fair value gap and then sell off and continue and take out all of these lows. So, and if you look at DXY as well, we still have these triple equal highs here inside of the premium, and we have a volume imbalance, and we have a daily fair value gap. So at this point, it only makes sense at this point. And if you look at DXY as well, this is all bullish structure, right? Making higher highs. We formed this down close candle and we closed above it, forming a bullish order block, and we had this bullish imbalance as well resting inside of the order block. So to me, there's nothing like bearish about this so far. Like, we had a sell side sweep, and we're just, this is bullish order flow right now, right, on the 4-hour time frame. Like, we're just making higher highs, forming order blocks. So in bullish order flow, you don't want to see price to lose this bullish order block and this bullish fair value gap here, and ideally you want to see price use this key level to expand all the way into these highs now. So DXY, new bullish key levels on the 4-hour time frame. EU, new bearish key levels on the 4-hour time frame. So what I did was I took a swing trade. I basically re-entered. I took a swing trade inside of this 4-hour BPR with my invalidation at the high, this sweep that caused this down move. So if price gets above the 4-hour BPR, then essentially my trade idea is wrong at this point, or either price will just continue consolidating here. So took my swing trade here, and at this point I seen this down move, but to be honest, because of how choppy we are, this is not really the most convincing down move. And what we did here is on DXY, and this is probably what will catch a lot of people out here, is we consolidated, we expanded, and then we took out this high here, which was the Asia highs. And in a seek and destroy profile, price will just be in a range. Price will be in a range, taking out range highs, taking out range lows, until we eventually break out of the range. But this is what catches a lot of people out, is that inside of a range we can sweep the highs and then we can still come back for the lows again. It doesn't, some people think that inside of a range, like, price will just, if we take out the range lows and we go for the range highs, the price is just going to continue to break out of the range. But sometimes, especially in a seek and destroy profile, which you have to be careful for, price can sweep the range highs, range lows, like, multiple times before breaking out of the range. So that's something that you always have to be cautious for, and especially knowing the market profile could be a consolidation profile after we've taken out the sell side. Like, for example, here we had, we came back into this order block, and then we went higher here. But if you look at the candle closure, we swept the high. We didn't get a body closure above this high. We swept the high, which indicates that price could come back for this low again. So I know what a lot of people would have done here is that they would have seen that we had displacement away from this 4-hour. Let me delete this key level. Some people would have seen that we've had displacement from this 4-hour volume imbalance or opening gap, whatever you want to call it, and they would have looked to go. They would have looked to go long inside of this fair value gap, for example. But you don't want to do that, especially because we haven't closed above the high on hourly time frame. So this could just be a potential stop run, and then we could just go back to the range lows and consolidate. So that's that's one of the things that used to catch me out. And I, of course, every time I took a loss like this, that's where journaling is, like, important and comes into play, because the losses that you start to take often is the ones that you'll start to see now and realize that, okay, this is what I can do to prevent taking a loss like that. But yeah, we had the exact same framework here as well, right? So when I saw this, I knew that a lot of people were going to get cooked here, because this right here, we swept the Asia highs in London. So I know without a high time frame bias, someone would see this and say, okay, cool, now we're likely going to go for these lows here, and then we're probably going to go for these lows as well. But yeah, at this point, you're basically ignoring the high time frame context that we have this high, which we haven't swept, and we have this bearish key level, which we haven't tapped into yet, and we have this key level, and we have these equal highs on the higher time frame, which we haven't tapped here. So if you're taking a short based off of a previous day high raid and in London sweeping Asia highs and displacement, this is where a lot of pattern traders get cooked, because they'll they'll short somewhere here, and then price will just reverse on them, and then they'll get fucked. So yeah, I used to also take these kind of trades where I would focus too much on the lower time frames, and I would go on the 1 hour or 15-minute time frame without looking at the higher time frame context, that we have all these equal highs here, and the higher time frame bias is bullish. So if you go into the day without a higher time frame bias, and you're basically just looking for any type of trade, then this is like a trade that I used to take back in the day, where I would be like, okay, we have a London low, London high of the day profile, sweeping Asia highs, displacement. We formed the hourly bearish order block and bearish breaker. Let me go and short this hourly breaker and order block. But bro, at this point, you don't even have a higher time frame bias. You're just disregarding that we've had a sell side sweep into a hourly fair value gap. We still have this order block, and still have this opening gap that we're respecting. So we have three bullish key levels here, and we have equal highs here. So if you disregard that context and you just trade based off of sweeps, okay, London high of the day sweep, displacement, sure. Like if you just trade based off entry patterns with no higher time frame context, then that's where most of the losses will come from, and you'll get cooked trading like that. So again, I've speak about this so many times, but this is why it's important to have a higher time frame bias, and knowing where the higher time frames want to go here, because I don't know, it annoys me a lot when I see people just trading based off of patterns and not having a higher time frame context, because I know that's where most people will get cooked and take like stupid losses, just not focusing on where the higher time frames is heading towards. So yeah, once I seen this raid, I was not worried. I knew that price is just going from this external high back into this internal low, which is the London lows, and we have this fair value gap which we haven't tapped into. If you can see on the 15-minute, these are equal lows here, this low here, these are equal lows here. So price can come back for this high and take out this low, and then into the bullish key levels, and then continue higher. So price displaced higher, and on the 30-minute time frame we had this fair value gap that we inverted. We even had this lower fair value gap. So you could have taken a trade here at the next 30-minute open high low close, and then you could have aimed for this high. And if you go onto euro as well, it would have been a cleaner trade. At this point, when price took out this high, the first indication is you want to see price to close above this high, at least on the hourly time frame. And on this hourly candle closure, this gave the indication that we were going to continue higher, because we closed above the swing high. And then the 4-hour candle, we also had a nice bullish closure above. So this is a very strong indication that we were going to continue to go for these highs here. So at this point, I move my stops to on Euro USD. I move my stops to the New York highs once we took out all of this sell side, and we also closed, and we also formed this bearish breaker and bearish order block here. So yeah, and then I held my position overnight, and then I TP'd my position an hour ago at this low for around a 3-hour trade. But yeah, I wanted to quickly go over. So on DXY, I was saying that, you know, you could have taken a scale and position around here, and on Euro USD you could have done the same thing. Swept the London highs into the key level, so stop run into bearish key level and sent inside of bearish order flow. And that's another thing as well. If the order flow is bearish, like in this example, the 4 hours bearish and the hourly is bearish, you don't want to fade the 1 to 4 hour order flow, especially if we haven't taken out the liquidity yet. If you take out liquidity, then you can fade the 1 to 4 hour order flow, but even then it's still risky. At this point, you want to wait for price to show 1 to 4 hour structure again. But at this point, because the order flow is bearish and we have equal lows, this is prime shorts territory. All you want to do is wait for a bearish stop runs and then look for shorts. So here, stop run. So at this point, swept the London highs into the 4 hour BPR again, So all you do here is you just wait for a lower time frame confirmation. For me, I just took a swing trade because it was a Friday and price is very choppy on the higher time frames, and this is the monthly. On this day was the monthly close, so I didn't want to take another position. But this is a very clean trade that you could have taken. So yeah, on the 30-minute time frame, if I had this fair value gap and this fair value gap as well, so you could have taken an entry on the next open high low close. Stops here, covering the BPR, and then you could have taken a trade towards this low, and then you would have got a 3-hour trade here. So yeah, I'll say the one thing that I could have improved on this trade. I'm happy with everything else I've done, the trade management, everything, but the one thing I could have improved on with this is take a scale and position here. I could have taken a nice pyramid entry, and I would have been up 6R on my positions if I took this entry here. But yeah, I had my reasons for not taking it, so it is what it is. But yeah, that's the breakdown behind Euro USD now, and now we've now tapped into the premium of this, into the discount of this dealer range. So now at this point, I'm just waiting for what price wants to do and waiting for the daily close here. So yeah.